Here comes the crypto crash. We are breaking supports left and right, but this should come as no surprise because if you've been following my channel, we've been looking for some more downside follow through over the past couple of weeks since our last few updates, not only in the overall cryptos, but in the specific coin updates that I do on a regular basis. We have had several more coins break support, and we're seeing a lot of follow through in equities as well. This is actually the ES mini futures. So this is the S&P 500, which was down about 1.2, 1.3% as of a few minutes ago. It's a bit of a bounce that looks corrective so far, although we are seeing some MACD divergences, but that's equities. This is obviously an update on cryptos. So we're starting with Bitcoin, which is within a few hairs of breaking its support, which would be the low that we hit on January 24th. That support sits at 33,800, 33,786, something like that. And we're very close. Well, actually, I think I may have misread that. It's actually at 32,936. We are at 33,755. So less than $1,000 from breaking that support. Going to go on to Ethereum. Ethereum has a little bit more cushion because it has not fallen as quickly, although looks like even within the last few minutes, it started to accelerate its downside movement. We're in a bit of a mini bounce. We're sitting about 2468. Our major support here is sitting at 2300. Again, just like with, well, actually, this is the support from February 24th. Our bigger support would be at 2159, which is where I would expect Ethereum to bottom anyway, ultimately. So we're going to go to Bitcoin Cash, which has also broken its support. Its bottom was on February 24th at 260, and we're just below that, about 10 cents below. Ethereum Classic, we're closing in on its support at 2340, although Ethereum Classic, like Bitcoin and Ethereum, have their bigger support from January 24th at 2123. So a little bit more follow through needed before we're down there. Litecoin, probably going to do an update on this coin next when I do my next video, but this has also broken its support at 91.55. Doge got a little bit more cushion. We're not quite down to the 10.7 cent mark yet. Dash getting closer, about $83 right now. Support is at 77. Polkadot, I mentioned this broke support about a day or two ago, so we're below the 1406 support. Chainlink is below 1143. This was one of the first coins to break its support early last week. Solana broke its support at 75.79. Stellar Lumens, since my update, which was the last video before this one, has broken the 16.1 cent mark. So it is also heading a bit lower. EOS, it is closing in on its support of 186. Polygon, this was the first of the coins that I analyzed that broke its support. So it's been below support since April 26th and continues to grind lower as we speak. And finally, Shiba Inu closing in on its 0.000016 support. So getting closer to, well, following through. I'm going to shift back to Bitcoin real quick just to get an idea again that, well, I'm actually going to shift to the big picture chart, my bet. So this is, again, Bitcoin, logarithmic chart, daily view, and a lot of the coins are following on what appears to be a fourth wave, and this is what you expect in a fourth wave correction. They're very long. We got a higher high, which is our B. Purple is, well, purple, red, same thing. I know the colors aren't matching up at the moment. I haven't updated this chart in a while, but we are presumably in our final fifth wave down on this bigger C wave correction. So if I draw this thing appropriately, call that a 1, 2, maybe a 3, fourth wave, and a fifth wave. Whether that is actually the one down or the one is up here, not totally sure, but this is about what you'd expect. A little bit of a pretty good rally, very deep fourth wave. So based on that, we don't have, well, we do have lower to go. Our purple box still stands as our official target. There would be a strong support at the low that we hit in 2021, right around $28,600. The lower support sits about 24,000. I personally don't expect us to get all the way down there. I did put this Fibonacci extension on here based on a very common Elliott wave equivalence, which is the 3 and the 4. If we build out that extension, 0.618 to the 0.764 extension would be the most likely zone of retrace. So we'd be looking at somewhere between about 30,600, maybe down to 27,395. I can't see us going too much lower than that because we're already pretty extended down. And actually, now you're seeing the MACD curl back down. So on the next little bounce, we may see the divergence forming. I'm going to look at Ethereum real quick. Ethereum has a bit more room down below. We had much more of a bounce. So we're going to see how we follow through. Again, we have more cushion before we hit our low. It's got a little bit more ground to make up before we're done. And if I use the same equivalence here, assuming this is a third wave, fourth wave top, and we're falling through on a fifth wave down, that puts us at about basically the low that we already hit, 2177. That would be a strong probability target for a low, although we could go down as much as 1934. Ultimately, the ideal support would have been 1700. That's the support I'd been tracking since last summer. So while I don't see it as a high likelihood, it could certainly happen. It would follow some of our textbook Elliott wave rules. So that's kind of what we're looking at big picture. A lot of these coins look like they could graze the top of their target boxes. However, this is where things are very important. While people are complaining about the world ending and the sky falling and everything, got to be on your toes because we are very stretched to the downside. These things reverse very quickly. So don't get caught with your pants down. Don't get caught with all your cash out. And most importantly, don't sell when we're at the bottom. This is where it hurts the most. You're going to be in pain. We're seeing the same thing in stocks as well. When these kinds of pullbacks end, the rebounds are absolutely violent. We've already seen that many times across many different asset classes. I'm going to actually zoom out because this is the Dow representing our stock market indices. And when you look at this, we've had incredible rebounds even in stocks, which are not known to be as volatile as cryptos or commodities. In Bitcoin, history is similar. And as I've gone over with many of the altcoins, it's even more violent and even more volatile for a lot of those. So I'm going to shift over to some of the other smaller altcoins, the newer coins, things like that. Dash isn't really a newer one, but here we're looking at finishing off a second wave, and our support still sits at $61. Several of these coins are in what we're calling a second wave. I believe Stellar was one of the other ones, as well as a couple other ones. So we would expect a pretty deep retrace, and after the second wave comes a third wave. So it could be, again, a violent reversal. Get your buying plans ready, because the second we see a 5-wave rally off of our bottom, that would be a very clear sign, or a very strong sign, that we may be done with the downside. So something like this, I know I'm drawing this from where we are at the moment, but assuming that we don't go, we actually follow all the way through, you could see something like this. I'm actually going to zoom up on Bitcoin Cash, just because it had a slightly cleaner pattern. And all the other coins, again, are following very similar sentiment. We look like, for market context, it looks like we are following through on our third wave down. This, again, is one of the coins that just recently broke its support. So going back to the top that we were around in end of March of this year, got our first wave down, very impulsive looking, looks like 5 waves down, but a nice bounce, perfect. It was about a 61.8% retrace. That's our second wave top. And we have since followed through, and typically you will hit at least the 1.0 on the third of the third. So we may be due for a little bit of a bounce overnight. And then ultimately, because of the proportions we have seen, expect us to get down to about 216 or so. That's probably when your sentiment will actually be the most bearish. That is the basically the bottom of the strongest movement down. Could see a grinding sideways correction. Could see this bounce pretty high, because it is again, it is a corrective wave down. It's an impulse, but could it morph into a diagonal if we see enough of a bounce? And ultimately, the bottom, I would expect to get to about 178. However, if we have a really big bounce in the fourth wave, we could end up truncating, could only make it to 193. I'm going to compare this to the big picture in Bitcoin Cash. And so about 185. So it does actually project very cleanly down into this box. And again, I'm emphasizing Bitcoin Cash because it's a bit of a cleaner pattern. It's a little bit easier to follow. And I have my Fibonacci's and my nomenclature set up very cleanly. But as I mentioned again, we are stretched down quite far. I know the MACD is not giving us much of a hint here, but typically you'll see it stretched the most in the bottom of the third wave. If you're looking to buy in tranches, it's a very good time to deploy your first tranche once we get to the bottom of that third wave. So again, in Bitcoin Cash, it'll be 216. Other charts will have their own numbers because all the coins are following their own numbers specifically, even if the patterns are similar. And when it turns around, it's over. So while a lot of us are hurting right now because the coins are crashing, we're praying for it to turn back around. Some of us may have unloaded coins. I know I have, I unloaded half of my positions. Others are far more bearish. Don't get attached to that emotion that it's supposed to crash. It's supposed to get down here. It has to, because that will cause you a lot of pain. You don't know when this thing will turn right back around. Truncated bombs are very common. we had been seeing nothing but truncated bottoms in the stock market pretty much all the way up until about the holiday season in 2021 to 2022. Up until then, we'd had nothing but substandard pullbacks. Nothing had hit their supports until this pullback. So things can change on a moment's notice. The market does what the market wants. Pay attention and have your buying plans ready. Don't panic. I'll have plenty more updates coming our way. So don't forget to subscribe and watch out for community posts, which I can get out much more quickly with charts and annotations than I can videos. Till next time, thank you for watching and happy trading.